And good afternoon. Welcome into Market Talk for Thursday, January 28th. I'm your host, Jesse Allen. Great to have you here with us. Good afternoon. You can find us online, markettalkag.com, all your favorite podcast sources as well, Apple Podcasts, Spotify, Amazon Music via your Alexa, SoundCloud, and more, or our great radio affiliates across the country from the Dakotas down to Texas. We appreciate everyone who's part of the Market Talk family. Well, an interesting day in the grain trade, and let's get into it. Joining us today, our good friend John Heinberg with Total Farm Marketing by Stuart Peterson. John, good afternoon, my friend.
Good afternoon. A little bit cold out there in Wisconsin today, that's for sure.
Little bit. I'm hearing some of those cold temperatures up there in the northern parts of the country, and it sounds like it get cold again next week. So definitely winter has decided to show up the last few days, hasn't it, John?
Yeah, since 1st of January, we've gone from minimal snow to a pretty white environment here, at least in southern Wisconsin. And I know we got missed by that last storm compared to some of the folks out there in central Iowa or through central Iowa still. But now we're talking a little more on this weekend and maybe another storm next week. So welcome to January, everybody, here in the Northwoods. That's what we call it.
Yeah, definitely. Well, we'll talk a little bit more about that winter weather impacting livestock here a little later on in the show. But I want to start with today's soybean trade. And really, I think a lot of us scratching our heads. I mean, what happened? We started higher and then we just kind of crashed this market. Was it technical in nature? Did we just trigger some sell stops? Was it profit taking? In your opinion, what happened in the soybean market today?
No, I guess you can check the fourth box, all of the above. That's really what I'm looking at right now. I mean, prices haven't acted well since we put those highs in here after the USDA report. And, we had that 40-50 cent up day. And, we've been softer since then. Last week we had the hard sell off on Friday. That was probably tied to the options expiration. Again, here we are today with a very similar type price action. It started yesterday again too. Prices just felt a little bit soft. You just couldn't really hold on to things. That goes in the core market as well. And then about midway through the day today, it just looked like somebody opened the door and down we tumbled. I mean, we lost about 30 cents of value off the bean markets in literally about a 5-minute window, and we just never recovered from that. So that's a little concerning. Again, some of it is profit taking. Obviously, we're well elevated here. The other side of it too is just we're in a very extremely volatile market. We're trying to figure out if we're going to make the next move higher, what's going to be the place that comes into play there. South American weather has improved, so we're taking some of that weather premium out. But we talk about the demand side of the market, that does not seem to want to go anywhere. And realistically, I think the market's kind of forgot what its goal is which is to kind of help manage supplies and reduce the demand. And we're not going to be doing that at 13.50, 13.60 in the old crop beans.
Well, and I wonder too, weekly export sales, they were down, 74% from last week there on beans. And I would have to think that had a pretty strong play on the market as well here today. That was surprising to see him down so much this week.
Well, if you go back, and again, don't forget those are retroactive to the previous week, and that was also the week of the USDA report when prices went to 14.30. So obviously that is going to shut off demand. Again, that is what the goal of the market is supposed to do, is to help manage supplies. So I wasn't shocked that we did fall back in terms of the export numbers. We still put 460,000 tons out there, in a market where we're 95% sold the USDA target. Realistically, 400,000 tons is still too many. So it's going to be interesting to see how that kind of plays out here over the next few weeks and what we're seeing with that export side. Now, the one little side note that was a bright side today, wheat export sales for 2021-22 or next year's crop were at 1.5 million tons this week, of which China and Japan stepped in for the majority of those beans. China and the Netherlands stepped in for the majority of those beans. And that puts cumulative sales at this time point for the 2021 crop at a nearby record, again, in terms of total bushels on record for sales. Mm-hmm. So that's something to keep an eye on, as they're looking at $11 or basically 11.30 beans here, seeing that's a value considering where front month beans are, and we're starting to see the importers step into that market to procure supplies for next year's crop already.
Well, and looking at soybeans here, one final thing I wanted to talk to you about. We talk about price rationing and looking at our ending stocks. Do you think we're rationing enough right now, or are we gonna have to do more? Otherwise, I mean, are we gonna risk complete depletion here in the U.S.? Where do we stand with price rationing right now?
Realistically, at this stage, I would say no. We said this a couple of weeks ago. We didn't think we were rationing them when we were at 13.80, and now we're still under that price level. I wouldn't be surprised if we see some more market movement on the export front for beans fire up this week. We actually had a couple sales already, come together here earlier in the week. So again, that's still going to keep some pressure on the USDA to make further adjustments off that export total and raise that number up and bring that ending stock number down. So will they do that over the next couple of months? We'll see. But I'll tell you this, if we continue this export pace in terms of moving those beans out and just getting some marginal sales on a weekly basis, we're going to take that number as close to zero as we possibly can, maybe back to where we were in 13 and 14, where even though the USDA said we had 50 million or 60 million in the pipeline, we probably didn't have that. So that's going to be, again, a very key point going forward. February does concern me. A lot of things coming up here after we get through that USDA report on the 9th. Obviously, the Chinese holidays coming in play. They'll be out of the market for a week. And then we got options expiration. And we saw what happened last week with the February options expiring on Friday. And then the USDA outlook forms coming. And that'll be our first kind of a glimpse of acres. Again, those are baseline projections. But over the last couple of years, that report's kind of turned into a bit of a wet blanket on the market. So, given the calendar, where we are in price, if we don't really get some strong news, I think prices could stay soft and maybe work sideways to lower, but be volatile with big swings like we've seen over the last handful of days.
Well, this corn market today, we got that flash export sale announced this morning, another 1.7 million metric tons of old crop corn to China. And that brings the weekly total to 147.1 million bushels of U.S. corn. We had another sale of old crop to unknown thrown in there as well today. We set a new contract high in corn, and then it seemed like, I'm guessing, soybeans kind of just pulled this corn market lower as soybeans turned lower today. But really, it looked like for a while there we were going to have a really good day on corn.
Yeah, we're off to a great start this morning. Weekly export sales at 1.8 million metric tons was friendly, above expectations. And then we get that announcement from the Chinese on the USDA releases that come out around 8 o'clock every morning. 1.7 million tons is a big sale. It's the sixth largest in history, dating all the way back through the 1977 era when we started keeping track of that. And realistically, that's 3 days in a row. We had that 1.3 million metric ton purchase 2 days ago, 600 and some thousand yesterday, and again the 1.7 today. So if you add that up, the largest sale we've ever had in a one-time flash sale was back in 1991 to the USSR for basically 3.7. China this week has bought 3.74 million tons, or about 160 basically million, or about 150 million bushels. So also, we picked up some news this week too from the ADM conference call, their earnings call for the quarter. They also announced that they got a 200 million gallon sale of ethanol going to China for the first half of the year. So calculate that in, that's another 70 million bushels. So this week we've kind of got headlines on about 220 million bushels of demand. If you go back to that January report, the USDA took 100 off of exports and 100 off of ethanol. Well, guess what? We put 220 maybe back on the balance sheet this week alone.
Well, and I want to ask your opinion on this. I've had a couple questions come in from some producer friends across the country, and one in particular, he was asking me, what I'm hearing. He's got about 50,000 bushels of old crop corn sitting in the bin right now, and he's wondering, have we put a high in here in this market? And, looking at this impressive Chinese demand out there for corn and ethanol, it seems right now this week, what would you say to someone who's holding on to old crop corn right now and looking at their balance sheet? I mean, do you think we're about ready to top this market out, or should they be selling right now? What would your opinion be on that?
Yeah, it's a mixed bag right now because, again, given the calendar, where we are, the way prices have acted, it doesn't feel very good. Like I said, it feels kind of soft in here. And, again, the fact that we pushed to new contract highs and didn't hold those today and barely hung on to positive territory. Now, we'll say this, though. March corn actually by 0.25% put a contract high close in today. So got a lot of mixed messages. Now, if I'm sitting on bushels here in this window, what do we do with it in that regard? I've had to answer that question to myself. It comes down to your individual situation. I do think we're going higher. It may take us through the planting window. So you got to ask yourself, is it worthy to jump on these prices, reward yourself for your patience, at least at this stage, then come back and look at some strategies for the summer in case weather were to kick back in. Or you move half and then make sure you got some protection on the other side of it as well. I guess also comes down to where's it at? If it's in a bin, are you paying for storage? If you're paying for storage, you can probably go ahead and move it, reward yourself, take the money that you would have put to hold it out into September or whenever you would sell it, own some ownership over top. So it's hard to answer that question with one broad brush. So it comes down to what that producer needs and what his cash flow needs are. One thing though, where we're going into the window we are with South American harvest coming up here, as well as again those things I mentioned in February, holding some cheap puts just to make sure you got a secure floor underneath this thing through the May window or even into the July window. My fear is we get a big acre number for corn and we get some really favorable weather given the drought monitor map that we see out there. If the weather comes out pretty nice in the spring, with the technology we're going to produce this and put this corn in the ground extremely quickly, and that'll pressure the market just because until we realize where the crop is going. So those are some headwinds that are in front of us here. So again, not liking the price action the last few days, but it's still at the same time, is this market really rationing supply? And with that move on the Chinese this week in terms of the demand that we're seeing, carry out might be getting closer to 1.2 versus 1.5. And if that's the case, we need prices to go higher in the short term.
John, let's touch on wheat futures briefly here, the wheat trade, and down today, I would assume kind of pulled lower by quarter beans as well. I noticed Paris milling futures were lower today as well. Weekly export sales, they were up a little bit. Any thoughts on this wheat market and what you're seeing there, why we turned lower today?
Maybe a little bit of outside influence there as well. Again, yeah, we're seeing some softness. Now, first off, maybe we got a little bit of buy the rumor, sell the fact mentality. That Russian export tax is going to come into play here. So, that's been approved now. So now the market can kind of digest where that comes into play. That's some of the reason we're seeing weakness in the European prices. And again, we're also watching the U.S. dollar index. It has tried to turn the corner here a little bit, so it is working a little bit higher. So again, when you start comparing U.S. wheat versus other classes of wheat globally, we're still at a price disadvantage, and that's also some of the reason export numbers were, lackluster today. They weren't horrible, but they weren't anything spectacular by any stretch of the imagination. You got a market that's really put a lot of value in it. We've seen a nice correction. We're kind of retesting that correction a little bit in this window. So again, it's going to move very, very quickly with the other classes or the other grains. And then we saw that, corn market, bean market kind of fall apart today. Wheat became an easy sell also against that market.
Let's move over to livestock, John. Cattle here today. Well, cattle and hogs both. We saw decent export sales numbers come in on the weekly report and really just had a mixed bag today. Pretty cautious tone, it seems, in this market. It seems like the market wants to trade higher, but we're just kind of, with this cautious tone, we're getting a little bit of opposition right now. And I know with that winter storm we alluded to earlier on in the show, that's kind of slowed the cash cattle market here this week. I know we're starting to see some activity finally this afternoon, but looking at cattle trade first, what are you seeing in this market here as we work towards the end of this week?
Cattle markets had a really good run from just a couple of weeks ago. We're talking $6, $7, $8 on the front month contract in April in terms of live cattle. Cash trade did move higher this week, 113 on the Fed Cattle Exchange. Really haven't seen a lot of countryside trade though, so we're kind of waiting to see what that kind of can develop here. Last couple of days, yesterday would just look like some technical profit taking. Today was consolidation trade just across the entire livestock complex. We do have cattle inventory numbers coming out tomorrow. USDA releases that semi-annually. We get it in January. We get it in July. So maybe that's bringing a little bit of a pause into the marketplace here. The biggest thing, cattle inventory numbers, usually they're pretty well covered with the cattle on feed report that we got last week, but we're going to get a good look at those cow numbers. We're expecting that number to be down about 1.7% from last year. So beef cow numbers continue to decline. That'll actually be our lowest level in beef cow numbers since 2017. Then we'll see what the 2020 calf crop is. We expect that to be about 0.8% under last year, so pretty steady with last year. But again, it gives us a picture that maybe we got some tighter supplies coming. So with that, like I said, the market's had a pretty good run. We just got a lot of softness across all the ag sector here this last few days. I do think in terms of livestock too, the big pushback in the stock market yesterday, even though it's rebounding pretty nicely here today, did come into it and just brought some caution in. So really kind of watching where things are going to go. Now, cash trade at 113 doesn't sound great, but realistically, if we go back to June, this is some of the best cash prices we've seen since that window. So, and with retail values pushing to 230 on choice carcasses and 220 on select, the Packers are making some decent money. So if the feedlot resolve can kind of hold in here, I think we can trend this a little bit higher going forward, and that'll keep some supported to these front month cattle contracts.
Yeah, well, let's look at hogs as well here today. And it seems like, with that strong export report, we get higher cash prices. That pork cutout continues to be elevated. It would seem like this hog market wants to trade higher. We've been trying to hold support, fairly quiet day today. Probably some of that consolidation that you were mentioning. And looking at this hog market, I'm curious. I saw some summer months looked like maybe some reversals there today. What are you seeing right now in this hog sector? Anything to get excited about or worried about, John?
Well, you kind of hit it right on the head when you said consolidative trade again. I think some of the fluctuations of the volatility in the grain markets come over to play here too. We're kind of at that stage of corn prices go higher. We're going to see hog prices push higher to encourage production in the face of a higher cost. If things go lower, then maybe production stays heavy in the first place because feed inputs are lower. So it's kind of a bit of a flexion point here. So we're trying to figure that out. Still think there's great value in the market. Now, from month February, we're first notice days on the 8th, so we're getting close to the end of that contract, trading area. So right now it's running at a discount to the index. So that's going to keep February in check. We're still killing about 490,000 plus hogs a day. So the supply side of the equation is heavy. So I don't see that contract moving anywhere at this stage, even with the strong demand side. Been more focused on that April. Nice move out here this last week. Got through the resistance that was over top of it with the October highs. Now we're kind of back testing the $75, $76 area. And if that can hold, it still kind of opens the door for probably April to work higher. In the summer months look like they're headed to 90, but we've had a good run. And maybe it's a chance we take a little bit of air out here. If you throw some trend lines in, we're back testing some of the top of the range type trend lines that we just broke through last week. So, right now, again, still trying to find a little direction. Maybe it's just the January trade type action going on here, but I still like where hogs are, given that demand side. And, we saw cold storage this week. Those pork supplies are extremely tight, despite the strength that we've had in production. When we see export sales at 52,000 tons this week and shipments close to 40,000, that tells us, the Chinese are still active. That tells us that the pork market has definitely got some reason to be optimistic on the demand, at least through the first half of the year.
John, any other final thoughts you have for us today? Again, overall, pretty quiet day with some of this downward movement, but just that softness. I'm wondering, will we see it continue to think into tomorrow? What are some final thoughts you have for us?
Typically we see some pushback. With close wasn't very good today. We don't get any news maybe on the demand side, some export sales or something overnight. I wouldn't be shocked that we see some more pushback going into the weekend tomorrow. Keep an eye on the forecasts. Now, like I said, realistically, been watching the Brazilian forecast. They're almost getting too much rain, and it's slowing harvest down, which was already behind pace. And that's some of the reason we're seeing export sales for beans here is right now those beans aren't getting harvested. They're not getting to the ports, and the Chinese need beans, so they're getting them from us. So every time we ship another load of beans out, that's one less load that can get canceled. But definitely be on guard here in February. A lot of things that can come into play after we get through that report next week. It's going to be a time frame. I haven't got a lot of defense in at this stage, and I'm going to really start pushing that with our producers. Just make sure we build some safety valve puts to get us through the spring, protecting some of these especially these new crop prices as we start looking at the planting window, which, believe it or not, is not that far away.
It is not that far away. That is a good point to make there, John. Well, I know if producers have questions, they can learn more at totalfarmmarketing.com, or they can give you a call or an email, right?
Correct. Love to chat with them anytime. Give me a call at 800-334-9779 at the office, or go ahead and shoot me an email at jonh@totalfarmmarketing.com.
And again, you can learn more at totalfarmmarketing.com as well. John, appreciate the time as always. Have a great weekend coming up, and we'll talk to you next week.
Thanks, Jesse. Appreciate your time, and have a great week, everybody.
John Heinberg with Total Farm Marketing by Stuart Peterson, our guest today here on Market Talk. That's going to do it for our Thursday, January 28th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.